Hey guys, what's going on? Today is December 31st, 2023, last day of 2023. Normally on days like this, I take a look back at history. So I wanted to do a history refresher in this video with you guys, trying to give you some evidence into solving the puzzle of trading the markets in 2024. I think it would be beneficial for anyone that is serious about trading the markets to glance back at the market conditions and the historic analog dating back to December 2017, January 2018, February 2018. So what I've got here for you guys is a chart of Dow Jones. Now clearly Dow Jones been in the news pretty much every day because it keeps setting all-time highs. If we're to look back in history, even the time frame is almost matching perfectly to that of 2017. So as you can see, Dow Jones back then was at 23,000 in November of 2017. Back then had a lot of good catalysts happening in the markets, such as cut in taxes. All that was a huge catalyst that propelled the market higher in December and January. Now, the current conditions, we're going to glance at the current chart of Dow Jones, but basically I'm using Dow Jones as an example, but any other chart would resemble this type of pattern, whether we look at NASDAQ or S&P 500. Basically just use this as in this particular case, there was no shift from technology to value or the other way around. There was basically all indexes dropped in approximately same proportion within that time frame. So have this crazy move higher all the way up to here, which dates to January 24th, 25th roughly. As you can see, within 3 days, Dow Jones loses all the gains that were accumulated from October, November, all the way to the end of January. So 3 months of work by the bulls literally wiped out by the bears in 3 days. And guys, this was a phenomenal opportunity because back then we traded this on the put side. Nobody wanted to hear any bearish comments because the market just basically, as you can see from this chart, was going higher and higher and higher every day. But we've nailed this. And for some of you guys that are dedicated to the markets, but you don't want to miss this moment, sure enough, if you're not trading with 13 market moves, you will miss this initial moment. But in this video, I'm going to give you a solution to how you can actually not miss this whole big move. As you can see, a great predecessor right here to a much further drop was the initial gap down. So be ready for the market over the course of the next 30 to 38 days, I would say, to basically look like this on the chart. There's multiple catalysts, so we cannot pinpoint a specific catalyst that would make the market do this, but there's too many catalysts that are accumulating right now that could make the market make this move easily. So watch out for the first gap down and potentially the first gap down. Wait for a bounce and then enter your trade. This is a sure way, guys. This is the easiest way for you not to miss out on the big move after that. And remember, when this gap down is going to happen, okay, everyone will be telling you to buy the dip. And for maybe a day or two, it's going to look like, oh no, the market is bouncing. Like you see this 1-2 candles, they're like the market's not really bouncing strong, but it's stopped dropping, so the market could come down for a day or two, and then you get this. Now, as a reminder, the catalyst for this drop back in January of 2018, as things look like the market just cannot do any wrong, it's just going to keep going higher and higher every day, forever and ever and ever. Well, the catalyst for this was the fear of inflation. So holy shit, Leo, are you saying that not only does the time frame match, but you also got the same catalyst that potentially could be playing out in the next month, just as the whole world, basically, if you paid attention to my last few videos, the whole world has made the decision that the Fed has conquered inflation. We believe it's a bunch of crap. And we think the inflation is going to go only higher in 2024, at the same time as the growth is going to slow down. So, guys, this happened because the market, okay, got shocked. Hold on. We may be going into a period of inflation. So the market sold off roughly. A scenario that could be playing out in front of us here in the next 38 days could be, oh my God, the whole world thought that inflation was conquered. And boy, were they wrong, because we could see the price of oil could skyrocket. You see the price of gold skyrocket. We could see major worldwide interruptions, as the war that has been sort of multiple wars that we've had worldwide, they were sort of being on pause. Nothing severe has transitioned. None of these wars have transitioned into a new mode, but it could happen. It could happen at any moment. So anytime you have major interruptions in the world like this, it's going to make the prices go higher. Again, it's an inflation that caused by politics, which is basically impossible to control with monetary policy. So we believe inflation will rocket higher. And as the market realizes, well, shit, how can we get inflation to 2% when fucking oil price is now at $150? Okay, we can easily get this in the markets. So let's compare this situation to what's actually happening right now. Okay, so this is Dow Jones Industrial as of last trading day in December 2023, which would be December the 29th. Very similar chart, right? Even the time frame almost matches identically. So if we were to follow this historic analog from 2017 to 2018, guys, we could be very much at the drop-off point, because sometimes historic analogs, they don't track day by day, which means that gap down I was showing you on the prior slide, it could be taking place when we will open for trading on January 2nd, 2024. So this could be a signal to build some big positions over the next few days after that. Now, if the historic analog was to play out perfectly, well, clearly we got time till January 24th, roughly, and we got multiple catalysts in between, right? We've got the CPI number, we've got some major data. I think CPI is on the 11th. We've got a potential government shutdown, could begin January 19th by February 2nd, okay? There's got to be some kind of resolution on the budget. There's a lot of stuff that could break this market very quickly. But as far as the chart themselves, okay, instead of just focusing on this huge rise that's taking place that is almost identical to the rise right here. Look, it begins at the end of November 2017, keeps rocketing higher and higher and higher. There's a couple of small red candles in between, but overall it's just pretty much almost every day higher. Notably here, I want you to focus on what MACD is doing right before the drop-off. And so this cross happens before this major part of the chart is formed. So if we're to compare the MACD cross, which this would be a bear cross, we're almost there, which is what makes me think, well, hold on, we may not go until January 24th for this drop to take place. This could be, I mean, literally, what could be next 72 hours. We could see that gap down. That's going to show us the signal, okay, to go heavy on these big short positions, okay? Now, notably, RSI is pretty much at close to the highest level here, but sometimes I talk to traders and they like to simply short something because it it's an overbought signal on RSI. I would stay away from doing that because sometimes certain things, they could be overbought for quite some time. And that is already the case here. Look, we're off the charts on this RSI rate in here. It does not mean that things could not stay this way for another 20, 30, or 38 days, okay? But there's other signs here that price action is telling us there is a divergence between RSI and price action already, meaning we get to this point and then we got a small drop off and then we resume and we actually reach a higher point, but RSI does not move to the next high. So this could be your first giveaway that, hold on, this drop off, it is here. It is, the market could drop the fuck off any moment. So keep a close eye on how this chart is developing, but there's a lot of similarities in the timing of this cross and the timing of some of these other factors such as RSI divergence. We're close. We're very, very close. So again, pay close attention to the initial gap down, which could be taking place much sooner than the historic analog points to. Now, the next thing to consider when we're looking at this historic situation is to take a look at what Bitcoin was doing. So for those of you that follow the channel, you know this is a really extraordinary example of how Bitcoin predicted what was going to happen next to the market overall. So blue and red right here, that's Bitcoin price action. December 18th sets the top right at 20,000 and basically drops over the course of 3 months, erases like 80% of the gains. This video is not about Bitcoin. I'll post a separate video on that, but this was a point where Bitcoin tops, and exactly within 30 days, this right here in green and orange, that's S&P 500. So S&P 500 topped 30 days after Bitcoin tops, and very similar conditions we're seeing in the chart right now. Now, again, historic analogs, they don't necessarily have to run day by day. A perfect match would be insanely crazy situation, but hey, we're close enough to where we could say, look, Bitcoin just topped out at 45K. If you were listening to some of the messages I've sent out recently, basically we said Bitcoin at 45K, that's a temporary top. We have to drop first before Bitcoin can set some record highs over the course of the next 12 months, which I believe that's going to take place. However, don't miscalculate the fact that Bitcoin can first drop sharply and then go to the moon. So this historic analog on Bitcoin could be utilized in calculating approximate number of days when the market's going to drop. So in this particular instance, it was approximately 30 days. Let's take a look at the current situation. Okay, so in this case, the peak in Bitcoin of about 45K, depending on exactly which chart you use, your price could slightly vary, but we'll call it 45K. So it's right here, right here. In many trading exchanges, maybe it was referenced as a 44.6 or 44.7, but let's round it up to 45K here. So it's December 4th, roughly, 4 days later, December 4th, December 8th. We'll calculate 30 days from there to match it with a historic analog. That gives us a date for a market crash anywhere from December 10th through anywhere from January 10th through January 20th. And again, within that period, it coincides also with some major catalysts, such as the CPI on January 11th. It coincides, the chart, the historic analog coincides for a projected drop, a sharp drop, with some major catalysts that I think is going to be very difficult for the bulls to overcome. So understanding this, guys, it spells insane period of huge trades if you're a short seller. So guys, you should really proceed with this information with a high level of urgency. I'm still waking up here this morning, so I'm gonna get a cup of coffee. I'm gonna record a few more videos here for you today. It's beyond me how many people want to be bulls at the top of the market. It happens every time, so history never changes. Every time market does this, the number of market participants that believe the market is going to keep doing this, it's at the max. And so that's when you catch some major trend reversal opportunities. So while everyone expects the market to do this, what's likely to happen is this. And I don't want you guys to miss it. So sign up at 13marketmoves.com, sign up at 13mmtv.com. If you want to understand how this chart works, if you want more insight on some of these historic analogs that we're looking at, such as some of the other ones I mentioned for the years of 73, 75, 78, 79, 81, 82, I've got a very thorough breakdown on those as well. If you're curious to learn more about historic analogs and how to use them in your trading in 2024, just visit our websites, sign up, guys, trade with a coach, get better as a trader, and I need some coffee. I'll see you guys in the next video soon.